Well, ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex quick look. Take a look at the dollar versus Canada. Today's date, December 16th, 2024. Let's get started. Well, needless to say, the dollar versus Canada has been trending to the upside, and the high price today has reached up to or stretched up to 1.4261. That's just short of this high going back to April of 2020. This high came in at 1.4264, so we're just 3 pips short of that next target. If we break above that level, then we'll look toward this target up here, which is another high going back to, I guess it's March of 2020, and that level comes in at 1.4348. It's hard to see, but those are the levels that would be targeted next on further upside momentum, getting above the 142.64. Now, it could be sellers that lean against this level right here. Why? Because risk can be defined and limited against that old high right there. And if so, then we look for a rotation back to the downside. And when we start to do that, we start to look toward levels that would tilt the bias more in favor of the sellers from a technical perspective. And to do that, I'm going to take a look at the hourly chart. And we take a look at the hourly chart, you can see the trend to the upside for this pair. And we saw on last Friday's trade, the high price came up near 1.4244. We came up to around 40. Around the 40 level here, and then 44 right here. So getting back below those levels and staying below those levels, that would be a tilt, the smallest of tilts to the downside for this pair, but nevertheless a tilt. And then we start to look toward the 142 level, and more specifically this ceiling right through here where we had 1, 2, 3, and then we had the 142 level up here as a high right here. So all these highs right here form this ceiling before breaking to the upside in Thursday's trade and staying above those levels. So we need to get below the 142 even down to 141.91 level. Also within that range is the rising 100 hour moving average, which comes in at 1.41916. I guess this high price here comes in around that 94 level. So 94.91, 141.91 up to 142.00. That's the area that needs to be broken on the downside. If we start to do that, then we'll look toward the high price going back to this day right here, and then we'll start to look down toward the 200-hour moving average, which also happens to correspond with this high price right through here and these lows right through here, and high price here and this low right here before moving to the upside. So all these levels are levels that would need to be broken on the downside to increase the bearish bias. Until then, the buyers are more in control, folks, and get above the 64 level opens the door for further upside momentum in this pair. So be aware, be prepared. That's my take on the dollar versus Canada from a technical perspective. My name is Greg McCloskey. Fortunate to trading. Bye bye now.